Welcome again, guys. In this video, we'll be looking at the bearish engulfing bar candlestick pattern. Okay, before we move forward, remember, bearish comes from the word bears, meaning downward movement. Bullish comes from the word bulls, meaning upward movement. So in this video, we'll be looking at the bearish engulfing bar candlestick pattern. So there are 4 conditions for this pattern, but then at least 3 has to be met. Let's look at the conditions. So the first condition is this. It consists of 2 candlesticks. This pattern always consists of 2 candlesticks. As you can see here, we have 1 and 2, right? And then the second candlestick's body, remember body, guys, the rectangular thing, body is longer than the first. So the second candlestick, this is 1, this is 2. So the second candlestick's body has to be longer, as you can see here, than the first candlestick, right? And then the third condition, the first candlestick is smaller and engulfed by the second one. I have put a star here because we'll discuss about this condition later on. But this is what I mean. The first candlestick has to be within the second candlestick. It has to be completely engulfed within the second candlestick. So as you can see, it is within the second candlestick. And then the fourth condition is 1, 2, 3. The fourth condition is the second candlestick's low is lower than the first. You remember, guys, a candlestick, it consists of a low, the components of a candlestick. So let's see here. So this is what I'm saying. The second candlestick's low. Here's the low of the second candlestick, and here's the high. Here's the high of the first candlestick, and here's the low. So the second candlestick's low, here it is, it has to be lower than the first one. You can clearly see here, it is lower, and then now this condition is met. So let's look at the psychology behind a bearish engulfing bar candlestick pattern. By psychology, I want you guys to understand what does it mean when this pattern forms at a certain level. Let's say you see it at the top of a trend, you see it at the support, you see it at the resistance, you see it at the downtrend, you see it at an uptrend, you see it when you are trading head and shoulders, you see it when you are trading any strategy. What does it mean? So you have to understand. If you can understand what it means, like the psychology behind the formation of this candlestick, you'll be able to identify opportunities. Just like I said, you have to understand what the market is trying to tell you so that you can capitalize on the opportunities presented. So let's see here the psychology behind this candlestick. First, let's say this candlestick forms at the top of a trend. Let's say this is an uptrend, and then it forms at the top of an uptrend. What does it mean? So if you see this candlestick forming at the top of a trend near a resistance level, let's say there was a resistance level here. What does it mean? Well, it means a potential downward movement is coming. That is one. Or it means that you can anticipate a bearish reversal. So this was bullish movement, and then we see it at the top of a trend near a resistance level. Anticipate a bearish reversal, meaning price will start to change its direction and then go downwards. As you can see, it is forming here. When you see it forming here. And then another thing which I want you guys to keep in mind when you see this trend at a certain level. Let's say you see it again at the top of a trend near a resistance level. And then you are analyzing, and then you see it forming near a resistance level at the top of an uptrend. What does it mean? Well, it can signify a sell, a sell confirmation, like a sell signal. So if you are not in a trend and then you see it forming near your resistance level in an uptrend, it can be used as a sell signal. So after seeing this near resistance and an uptrend, you can use this pattern as a sell signal, meaning you can enter your sell here, and then write it all the way down. And also it can also be used as an exit signal. What do I mean by this? Let's say you entered a buy here. Let's say you entered a buy here and you are riding all the way up, and there is a resistance here again. And then you see this pattern forming. A bearish engulfing bar candlestick pattern forming near a resistance level at the top of this uptrend. You are already in your buy. You are milking the market, you are in profit. And then when you see this pattern forming here, guys, this is what I was saying, like you have to understand the language of trading, which is candlesticks. When you see this pattern forming here, one person who knows how candlestick works will understand the language of trading. When you see it forming here, he will take his profits. He will not be greedy. But the other person who doesn't understand anything, he will remain in the trade and then the market will just reverse and take all his profits until it reaches break even or reaches a loss if price goes all the way down. So you have to understand, like when you see this pattern forming near a resistance and you're already in a buy, and then you see it forming here, take your profits, close the trade. Simple as that. So it can also be used as a exit signal near the resistance level. So the time frame which I recommend you guys to use when you want to identify candlestick and then patterns is the 1 hour, 1 hour going forward, 1 hour to all the way to 4 hours to the 4H time frame. Okay, so now let's do some exercises, guys. So in this exercise, this is just a chart which I took from my trading view. So I want you guys to identify a bearish engulfing bar candlestick pattern here, all of them. But then I'm gonna give you a hint. Every time when you're trying to look for these candlesticks, always remember of the conditions. Two things. Always remember of the conditions, and most importantly, know where to look. You do not want to be looking for a bearish candlestick. Bearish, bears meaning downward movement at the bottom of a trend. You don't want to do that. What's the use of you looking for a bearish candlestick at the bottom of a trend? Rather, you want to be looking for them at the top of a trend. At the top of a trend, that's when they are most effective, because you can use them as a sell opportunity. So this is what I want you guys to keep in mind. Always remember the conditions. 1, 2, know where to look. So let me just go through the conditions again. 1, it consists of 2 candlesticks, always the case. The second candlestick's body is longer than the first one. The third one, first candlestick is smaller and is engulfed by the second one. The fourth one, second candlestick's low is lower than the first. Guys, if you forgot what is a low, what is an open, what is a wick, please watch the first video on candlestick patterns, because I explained this when we were talking about candlesticks. So I want you guys to pause your videos here and then try to identify bearish engulfing patterns before I give you the solutions. Okay, let's see. So I see 1 here, 1, 2, 3, 4. Note, these are not where these things I'm drawing, guys. These are just top of a trend. This is where I want to identify the bearish engulfing bar candlestick pattern at the top of the trend. But then if you look at this one, it's in question mark. Why is it in question mark? We'll explain this furthermore. So guys, you want to look for a bearish engulfing bar candlestick at the top of a trend or a swing high. I hope you guys know what is a swing high and a swing low. So let's see. So the first one, it is a bearish engulfing bar candlestick pattern, and then also this one is also a bearish. This one is an inside bar. We'll talk about an inside bar when we're talking about inside bar, but then for now just know it's an inside bar. If you disagree, think of the conditions which I told you. Yes, it's at the top of a trend, but think of the conditions only one condition is met, that two candlesticks are involved, but then the rest are not. And then this one is also a bearish engulfing bar. Okay, let's look at this one. We have 1, 2, and 3. All of them, they are bearish engulfing bar candlestick patterns. But then there are 4 conditions. Which one meets all 4? Which one meets 3? Which remember I said at least 3 has to be met. 3 conditions. There are 4. At least 3 has to be met. So let's see. The first one. If we look at the first one, the pattern consists of 2 candlesticks. So the first condition is met. 1. Second candlestick's body is longer than the first one. So the second candlestick's body, this is the body, guys, as you can see, is longer than the first one. So the second condition is met. And then the other one, its low, remember there's a low and a high, its low is lower than the first one. The low is here, and the high is here. The low of the first one and the high of the first one. So you can see that its low, the low of the second candlestick, is lower than the first one. So the third condition is met. And the other condition is the first candlestick is fully engulfed within the second one. So here all 4 conditions were met. And then when we look at the second one, again it consists of 2 candlesticks. This one always consists of 2 candlesticks. Second candlestick's body is longer than the first one. The body, you can see, the body of the first one is very small relative to the second one. So this condition is met. And then the second candlestick's low, this is the low of the second candlestick, and then this is the low of the first one. As you can see, the second candlestick's low is lower than the first one, then this condition is met. But the condition which is not met is this one, that the first candlestick is fully engulfed. As you can see, it's engulfed by the second one. As you can see, it overlaps at the top. It overlaps. So the fourth condition is not met, but 3 are met. So here we get a 3 out of 4. Here we get a 4 out of 4. And then let's look at the third one. Again, the third one consists of 2 candlesticks. The second candlestick's body, as you can see, second candlestick's body is longer than the first one. That is true. The low of the second candlestick is lower than the first one. That is true, but then it is not fully engulfed. Again, we get a 3 out of 4. We only need at least 3 conditions to be met. So that's why 1, 2, 3 are bearish engulfing bar candlestick patterns. So one thing I want you guys to observe here is where the pattern occurs. Observe where the pattern occurs. The pattern occurs at the top of a trend. This is very important, because if you remember, I said a bearish engulfing bar candlestick can be used as a sell signal. You want to sell at the top of a trend and buy at the low. So you want to identify these patterns at the top of a trend. But not only that. Okay, let me just whatever I was explaining, you guys can read here. I wrote it for you. Now let's look at the observation. One thing which I wanted you guys to note here. This is very important. We're talking about a bearish engulfing. Bearish meaning downward movement. Observe here where it forms. It forms at the top of a trend. And it can be used as a sell signal, meaning you want to sell at the top of a trend and buy at the bottom, right? So this is an uptrend, and then we get this bearish engulfing bar candlestick, and then we get the market drops. Again, get this uptrend, then it forms here. After forming, the market drops, and then we get this push up, and then it forms, and then the market drops again. So this is what you guys have to take note. When a bearish engulfing bar is formed at the top of a trend or a swing high, we tend to see market drop or move downwards, right? So in your mind, you must know that, let's say you analyze, you're using, okay, for now, we're not doing technical analysis. Just think about it. You analyze, you get you see a resistance here. Yeah? And then you see that this is the top of an uptrend. And then you see this pattern forming. The best thing you want to do is to enter a sell here. You want to sell here and make profit all the way down here. But then we'll talk about this when we do technical analysis. This is just an observation. I want you guys to keep note. Let's do a second exercise. And then in this exercise now, I want you guys to, this is the procedure. First, you have to know where to look, and you must think of the conditions. First, try to identify swing highs. And then that's when you can identify bearish engulfing bar candlestick pattern. So first, let's identify swing highs. Yeah? Let's identify all the swing highs. Think of the conditions and know where to look. Let me just remind you of the conditions. The first condition consists of the conditions of a bearish engulfing bar candlestick pattern. There are 4 of them. At least 3 have to be met. The first one, it consists of 2 candlesticks as always. The second candlestick's body is longer than the first one. The third one, first candlestick is smaller and is engulfed by the second one. The fourth condition, second candlestick's low is lower than the first one. From these 4 conditions, at least 3 have to be met to justify that this is a bearish engulfing bar candlestick pattern. So now here, I want you guys to identify swing highs from this chart. So from this chart, I want you guys to just identify swing highs. We'll talk about swing highs, but I want to just know if you know about swing highs. Okay, this is what I have identified. So from these labels, guys, from A, B, C, D, E, F, G, and H, try to identify swing highs. I'm making it easy for you. And then say, write it down before I explain what is a swing high and what is a swing low in the next slides. Just pause the video and then write which ones you think are swing highs from A, B, C, D, all the way to H. Okay, let's talk about swing highs. So one thing you have to understand is that a high in Forex is relative based on different time frames and period. What do I mean by this? If you are looking at the 4-hour time frame, if you are looking at the 1-hour time frame, of course you have different swing highs based on the time frame which you are focusing on and the period. Period is from here. Period is like from A to B. You see, this is A. You're analyzing from A to B. Based, let's say you are a day trader or a swing trader or an investor. Day traders, we don't look at like 1-year chart frame. You see. So based on the period which you're analyzing, I normally analyze from the 1-hour time frame to all the way from the daily to the 1-hour time frame. So the best way to identify swing high is for you to define, must define a starting point. Let's say here it's A based on a particular time frame. In my case, I use the 1 hour, the 1H time frame, and period. So you must identify your starting point and your end point. And how do you identify a starting point? You identify the starting point and the end point based on momentum, meaning bullish momentum and bearish momentum. You'll see this in the next slide. So this is your starting point here. This is your starting point. This is your end point. In a bearish market, as you can see, in a bearish market. So the market is moving downwards. Which one is your swing high? Of course, if you're starting here, this is a swing low, swing high. So swing low, swing high, swing low, swing high, swing low, swing high, all the way to the end in a bearish market or a downtrend market. Identify the momentum, whether bearish or bullish at a certain period. In a bearish market, the swing high is found at the end of a retracement. So in a bearish market, the swing high is found at the end of a retracement. What is a retracement? So a retracement is like the opposite direction of the overall momentum of the market. So if we're in a bearish momentum market, if we're in a bearish market, this is an impulse, meaning impulse in the direction of the market, and then this is a retracement. So that's what I'm saying here. You find the swing high at the end of a retracement. Impulse, retracement, impulse, retracement in a bearish market. But then in a bullish market, it's the opposite. The swing high is found at the end of an impulsive move. So this is what I mean. This is an uptrend market. The swing high is found at the end of an impulse. So this is an impulse. And then you get your swing high. Retracement, you get your swing low. Impulse, swing high, swing low. Swing high, swing low, swing high. Exactly like that. Let's go back to the chart which I said you guys to identify the swing highs now. Remember, you must identify a period which you're analyzing from. You must identify whether the market is bullish at this period, whether the market is bearish, because the conditions changes as you saw what I explained here. So back to the chart. If you see here, guys, from A all the way to D, the market is what? It's in a bearish movement. Bearish movement is what you see. See this bearish movement. Okay, in a bearish movement, the starting point is here, the end point is here. Which ones are swing highs, guys? Of course, A is a swing high, A is a swing high, B is a swing high, retracement, impulse. C, swing high, impulse. D is a swing high, and impulse, and then it ends here. So A, B, C, D, they are all swing highs in a bearish movement, considering this period from here all the way to here. But then when things change now, as you can see here, that starting from here, from D all the way to H, now the market is in an upward movement. We're now in a bullish movement. It's no longer a bearish one. So considering these periods, if we start here, E becomes a swing high, and then H is a retracement. F is a swing low. D, swing high. H becomes a swing low. But us want swing highs. So in total, A, B, C, D, E, and G are all swing highs. So if now we have identified our swing highs, and I say that bearish engulfing bar candlesticks, we use them as selling opportunities, meaning you want to look for them at swing highs. What can we do with that information? Okay, just to summarize which ones are swing highs and why. This is just everything which I've explained. A starting point is a swing high, B is a swing high in a bearish market, C is a swing high in a bearish market, D is a swing high in a bearish market, E is a swing high in a bullish because now the market changed, F is also a swing high, G is a swing high in a bullish market, and H is also a swing high. H is not a swing high, sorry. And then now that we've identified our swing highs, let's try to identify bearish engulfing bar candlestick patterns now from these swing highs. Which ones are there? Which ones are bearish? And which ones are not? Okay, because some are not, guys, some are not, but then they are at the swing high, but some are not bearish. So keep that in mind. Think of those conditions which I told you about the bearish engulfing bar candlestick patterns, now that you know where to look. So this is what I've managed to identify. A is a bearish engulfing bar, B is also, C is not. I'll explain this why. D it is, E is not, and then F it is. But then there are at least 3 conditions have to be met. Let's see which one managed to meet all 3, managed to meet all 4, and which ones only met 3. From what I can see here, The first one, A. Remember the conditions. The first condition, there has to be 2 candlesticks. So from A, the pattern consists of 2 candlesticks, which is correct. As you can see. The second candlestick body is longer than the first one. So this is the body of the second one. This is the body of the first. Clearly, it is longer. The second candlestick's low, the low is here, it has to be lower than the second one. So this is the low of the first. This is the low of the second one. Clearly, it is lower. And this one is met. And on A, you can see that the first candlestick fully engulfs, meaning fully engulfs the first one. So the first one is within the second one. So all 4 conditions were met here on A. And then when we look at B, so you have 4 out of 4 conditions were met. So guys, I recommend you guys to rewatch this video over and again, like writing down notes. You won't fully understand everything all at once. So rewatch everything again because this video is long. So let's look at B now. How many conditions were met out of 4 of them? So the first condition consists of 2, which is great. And then the second candlestick's body must be longer than the first one or bigger. Clearly you can see relatively it is. And then the low has to be lower than the second one. Clearly it is. And the last one, it has to be fully engulfed. In this case, it is not fully engulfed. Let me just clear up and then talk about the engulfing one. So the first candlestick has to be fully engulfed, meaning it has to be within the second candlestick. In this case, it is not because it overlaps here. It overlaps. So we only meet 3 out of 4, but we only need 3 conditions to be met. And then when we look at C, it consists of 2 candlesticks. That's right. The body of the first has to be longer. That is right. Fully engulfed. Let me just clear this. Focus on the last 2. Is it fully within the second candlestick? Is it fully? No, it overlaps here, as you can see. So no. And then the last one is that one for the low. Again, like the low of the first candlestick, the low of the second candlestick has to be lower than the second one. Yet is opposite, so it doesn't meet. We only get 2 out of 4, and we need 3. So this one is not it. Then when we look at D, if you look at D, the body condition, it meets very small, and then the low 2 meets, and then 2 candlesticks, and then but then it overlaps. It's not fully inside. So here we have 3 out of 4 again, and it meets. This one is not. It is inside bar. We'll talk about inside bar later for E. And then if we look at F, the conditions, the only condition that doesn't meet is the one which is fully engulfed, because here it overlaps at the high. So also here we get 3 out of 4. So this is just the explanation, guys. Sit down and then go through the explanation and then try to understand everything. Hope you guys understand, and then I'll see you on the next slide.